Hello, good day, everyone. Welcome to today's live webinar with Ultima Markets. And as you can see from our slide for today, our topic for today would be Master the Market with Trend Analysis. So again, my name is Sean, and the Ultima Markets Senior Market Analyst. All right. So whether you are brand new to the financial markets or you have been trading for a while, so I guess there's one core principles that I believe there's one core principles that separates consistently on those successful trader from those who are still struggling to make a good profit or make a stable profit. And the difference is that the ability to identify and trade with the trends. So today we're going to break now on the trend analysis into some of the we consider one of the most simple way to understand and we talk about the actionable frameworks that we can actually apply immediately to our trading methods, right? Whether you are still trying to build your strategies or whether you are trying to learn you're a newbie that trying to learn, right? So basically what we have for today is sessions that would help you to look at the markets through the trends differently, right? So if you already already experienced in markets, or you're already been in the market for quite some time, so just take it as a revision that help you to look at the market trends in a different angle that you have never seen before. Maybe, right? So this is what we're going to cover today, right? So before we go into before I start our topic for today, so basically we are not going to talk about not going to talk about markets. We are mainly going to cover about some of the educational content for today, right? So we're going to talk about trends. So the first thing we're going to cover, of course, is the fundamental reasons why trend following is so important and why this form a backbone for the successful tradings. Right, this is the first thing, and of course we're going to cover on how to read the trends in different way, and we're going to explain to you how the trends actually move. Right, so once you know how trends move, you know that's one of the cycle in the trend right now, and eventually we're going to cover on how we can analyze the trends with what tools or what method that we can use to study about the trends. So this is basically the things that we're going to cover for today. All right. So the first thing, okay, let's go straight to the topic. So the first thing is we're going to talk about the basics, the foundations of trends. So what is trend? So simply put, trend is the dominant direction in which price move over time. So in a simple words, is how the price move over a period of time. But more importantly, from a structural standpoint, okay, a trend represents the path of least resistance in the markets. So whether it's on uptrends or downtrends, right? So we want to find out what are the directions that are facing with the least resistance. All right, so these are the things, and we want to trade along with the trends and not against it. All right, so this is a trend, right? So of course, there's some things that we need to know is that trend doesn't move in a straight line. So basically, they move in wave. All right. So once you're able to identify the trends, right, you know that which side you want to be on. All right. For example, during an uptrend, we got an up and down. Right. So of course, you don't want to short on the down. You want to buy on the down. Okay, when the trend is on the uptrend, right? Because this is where the buyer are currently control the markets, right? So why do we place so much emphasis on the trend? So basically, there are three core reasons. Okay, there's a three core reason. All right, let me put on some pointer over here. All right. Right, the first thing, of course, once you know if you want to able to study trends, okay, because they can help us to filter out the market noise, right? By focus on the macro trend instead of the smaller trends, right? So because you want to trade on the big trends, not on the small trends. Because if you study about the multi-time frame analysis, which we will cover on next week, right? During a period of pull down on an uptrend, we might see the short-term downtrends, right? So this is the noise that we see because many traders they tend to confuse and trade on the short positions when the market is on an uptrend, right? So these things, and of course, we also want to look on the directional bias. So when you have a strong directional bias, it's easier for you to trade, and you would have a higher probability tradings. Okay, when you align yourself with the trends, right? So this is why trends are very important. So as the word says, trend is your friend, right? So basically, these are the things that we want to know. We want to trade on the trends, okay? Because trends align you with the market momentums. Right? Let's take it for example, right? So imagine one day you are rolling boats on the river, right? You always want to go with the flow, correct? Because if you go against the flow, you need to spend more energies, you need to spend more force to row to row against the boats to row against the flow, correct? So this might take you a lot of energy. So same on the markets. Imagine if today you are going against the trends, all right, and you're not willing to take any stop loss when you're wrong, right? So you go against the trends, and eventually your capital is going to run out, correct? So capital is like our energies. You don't want to spend your capitals on the wrong trends or the wrong directions that cost you nothing and eventually run out of capitals. So same things. You don't want to row the boat against the flow and then spend all your energies and only find out that you are not going anywhere further and maybe you might go backwards. So these are things. So of course when you trade with the trends, basically you are actually increasing your overall success. Okay, so I mean, if you look at the market statistic, basically showing that the person that trade against the trend, trade with the trends rather than the randomly reverse or some things, they are more likely to make profits. And last thing, of course, when you're actually moving with the directions of the least resistance, you actually more comfortable when you do the trades, right? So this is why we want to understand about the trends, and remember the trend is your friend. All right. So after that, after we cover about why trend is so important and we define about the trends, so here comes to the real things, right? So how do we know what type of trends do we have? So basically in the markets, there's only three core structures, okay, which is the uptrends, the downtrends, and the sideways or the consolidations, right? So this is basically three types of trend in the markets. Okay? If the market is not in an uptrend, it will be on downtrends or a consolidations, right? So basically, we can't avoid that, okay, because basically the markets only in three different structures, right? Remember this, okay? Only in three different structures. There's nothing much, only uptrend, downtrend, or sideways. So these things that we want to know about. So I guess I believe that most of you already been in the markets know that how to read the trend, right? So here what we're gonna do is we're gonna go through again and explain to you how we can identify the trends. Alright, so for example, during an uptrend, so basically when an uptrend forms, you would see a series of higher high and higher low. So this is what we commonly known as the HHHL. Okay, higher high and higher low. So these are the things. Okay, so this is the higher high, this is higher high, higher low, higher high, higher low, higher high, and higher low. Right. So basically, this is how the uptrend structures form, right? So basically the price structure is moving upwards, and during an uptrend, it indicates that the buyer are dominating the markets, right? So it's ideal for us to go with a long positions, okay? And because like for example, I guess a lot of people here, especially those that are still new to the markets, they tend to make a mistake. Okay, they see that the price is going up. Okay, and then they're definitely going to come down eventually. Okay, then you go for a short. Yeah, maybe you make some profits, a little bit profits over here, but you're not taking any profits, and eventually the price go up again. Right. So when an uptrend happens, you always want to go for a long instead of shorts. Okay, unless you are going for a really short-term tradings, like maybe a scalping or maybe an intraday move. Okay, that's what unless you do that. Otherwise, we always want to go with an uptrends, right? So conversely, okay, if the trend is not an uptrend, it would be on a downtrend. All right. So basically, downtrend is the bearish structures, means that the price is actually on a series of lower high and lower low, which is what we call as LLLH. All right, LLLH. just a short names for the trends. All right. So basically, the price structure is making a new low, as you can see over here. Okay, new low, and lower high, and lower low, lower high, and lower low again. Okay, so basically, this means that the seller is dominating the markets, and it's ideal for us to short the this on the short positions. Means that when the price come up, we always want to go for a shorts, right? So this is downtrend. So I guess it's quite easy for us to identify actually. And the next one, okay, if let's say one day, some days, the market is not in the uptrends and neither on the downtrends, right? So this is where the market is moving into a sideways. So usually this means that the market has no clear directions. Okay, market is in balance, and then the bull and bear is in the tug of war. Okay, they are still fighting each other and see who is the eventually who is the last winner. All right. So the structure of a sideways usually means that the price have no clear high or low. Okay, no clear high or low, and basically they are actually consolidate or oscillate between the support and resistance line, or the price going to a converging move, right? So usually at this point we want to trade on the range bound, or we wait for the breakout, okay, to trade the next wave of the market move, right? So this is how we identify the markets. Okay, the uptrends, okay, the uptrends, the downtrends, and the sideways trends. All right, so basically markets only only structures in these three types of trends. All right, uptrend, downtrend, and sideways. Just remember that. All right, nothing else, only these three. All right. So when you're able to identify the stage of the trends, okay, is where is the current trend is, you actually will have a clear idea of directions to trade on and how you want to trade it. Like during an uptrend, you want to buy the dips, and during the downtrends, you want to sell the rally, and during the sideways, you want to trade the support resistance or wait for the breakout. Okay, so these things that we want to do. Okay, so how do we know what the next market move gonna happens? All right, whether it's on uptrends or downtrends, okay, or sideways, we want to know. Okay, we want to know what is the next move that could happens in the markets. And at this point, we need to start to look at how the trends actually move. All right, so let's rephrase again. So three type of trends: we have uptrend, downtrends, and consolidations. And now we want to know how the trends move, so that we can know that what are the next move that the markets are most likely to go next. All right. So how trends move is how we can I wouldn't say predict. I would say that's more like analyze. We can analyze on what are the most likely things the market is going to do next. So this is where we need to come to understand how the trend move, right? So basically, the trends only move in three ways. There are only three ways how the markets move. Okay, the first thing, markets move in trends continuations, or moving into a reversal, or they move into a consolidations. All right, remember this, okay? Trends only move in continuations, reversal, or consolidations. So we have three type of trends: uptrend, downtrends, and consolidation or sideways. All right, and trend move in continuations, reversal, or consolidations. So basically, trends continuations means that the market move by extending the current trend directions. For example, during an uptrend, okay, the price pullbacks and then go up again. This means that the fresh buyers are going into the markets at the reasonable pullback point. Or during a downtrend, okay, seller jump into the markets and they short the markets when the price rebound. Okay, so this would create a trend continuations, right? So this is the first thing, right? And the second thing is when the trend eventually comes to a point, okay, the point of the max, all right? Okay, we don't know when, but of course we can't predict it, but eventually a trend they would come to an end, okay, whether it's on an uptrend or downtrend. So, and when the price comes to a point of the end, all right, they might go into a reversal. Okay, for example, during an uptrend matures, okay, when uptrend is running out of buyer, okay, when the uptrend is running out of buyers, and suddenly because of something happens, okay, like maybe some bad news or some news came out, or something's happened to the asset, and the price will suddenly go into reversal. Right. So at this point, you would see that the uptrends might turn into a downtrend. So this means that the trends is actually reversed. They are not on continuations, but instead they are going to a reversal. Right? Remember this, right? So continuations, if not, trends would go into reversal. All right. So this is the second things. And the last one is when the markets are not in continuations or reversal, they actually move into a sideways. So this is where the trends start to consolidate. Okay, so this is where the markets take a breather, okay, or entering a sideways tight range. Okay, this means that the buyer or the seller are actually remain uncertain. Right. So at this point, it means that the trend is not going continuations or reversal. So for example, let's make some drawing over here, right? So at this point, I guess you guys all know about how the three types of trends move, right? Continuations, reversal, and consolidations. And now let's start to do some drawing over here. Let's draw some things over here. All right. Okay. So like what we say just now, okay, there's a trend continuations. Okay, I use TC, and then trend reversal, and trend sideways. Okay, we use TS. Okay, continuations, reversal, and sideways or consolidations. All right. So that's what we say just now. All right, trends. And I mean, there are three types of trends. Okay, for example, uptrends. Okay, is an uptrend, correct? All right. So when the price pullbacks, okay, usually during an uptrend, okay, for example, at this point, okay, price pullback against, and we can see that this is a very clear uptrend over here, right? So when the price pullbacks, usually we would assume that okay, the most likely next move of the markets is to continue is on continuations, means that the price may go up, continue to go up. Okay. Until someday the buyer is running out of momentum, okay, because of something happens or some bad news came out, okay, suddenly, right? And we will see the price quickly pull backs, okay, and then maybe forming a reversal. Okay, it means that there is no more higher high. Okay, the price starts to move into a lower high and lower low. So this would signal that the market trend is on a reversal. Okay, so as you can see, I mean, if you study about chart patterns, you realize there's something what we call as the head and shoulder pattern over here, right? So this is usually the reversal patterns I mean, these are the head and shoulder is the common reversal patterns that we have, right? So this is how the market moves, all right? Continuations and suddenly go into a reversal because of something happens, right? And on some cases, okay, for example, we might also see downtrends, okay, and then suddenly we see an uptrend reversal as well, all right? So this is basically continuations, reversal, downtrend continuations, and reversal again, right? So this is how the continuations and reversal happens. All right, and for the other things, okay, for some cases, okay, we might also see that continuations uptrends, okay, for example, and suddenly the price come into a consolidations, okay, because the buyer is actually running out of momentums, but the seller are still not dominating the markets. Okay, maybe because of there's a lot of uncertainties, and the bear is not entirely convinced that the market is going to come down, right? So the price might eventually go into a consolidations, which is the sideways. Okay, so this is how trend move. Okay, so you might see some like a rectangle box over here, or maybe you see some what we call as the converging triangles or something else. All right. So this is when the price starts having no trends. Okay, on the sideways trends. So this is where the markets come to a consolidations. Right. So when the market consolidations happens, okay, when the market consolidations happens, usually, okay, I would say usually, okay, it's definitely only two things are gonna happen. Only two scenarios might happen, all right? The first one is price may go into a further continuations, which is the bullish breakout and go on the continuations, all right? And on the other case, the price may go into reversal. Okay, nothing much. Okay, basically, this is how the price moves. Either they are going from the continuations to a reversal, or they're going from a continuations to a sideways, and eventually another continuations or a reversal. Okay, so this is how market move. Okay, remember that, all right? So markets only move in three ways. Okay, definitely in three ways, nothing much. Okay, continuation, reversal, and sideways. Right. So once you see a sideways pattern came up, okay, a sideways pattern forms. Okay, usually what we can do is we would like to wait for the next move. Okay, whether it's a continuations or a reversal. So sometimes you might want to read the news or study on some fundamentals. Okay, for example, like recently the US dollar. Okay. Okay, let me show you some example. Like for example, recently the US dollar. Okay. Right, so this is some of the example that we have done. Okay, so if you read about our market analysis, I mean our daily market analysis, you will see that we actually be covering all these parts for dollar. Right, so this is a very obvious things. Okay, I mean this is one of good example that we have. Okay, so the first thing over here, we can see that the dollar over here, all right. Okay, you can see that there's actually an uptrend form over here, all right. Higher high, higher low, higher high, higher low, and eventually the price have not formed any higher high, has not formed any higher high, right? So the price pullback. Okay, so at this point we basically can identify that the market. Okay, let's use 4-hour charts. Okay, maybe okay, the market is actually moving into consolidations, but because of there is not much of support over here and the price breakdown, right? So basically over here we can identify that this is an uptrend over here. Okay, this is an uptrend over here, and this is the consolidations, all right, and this is the breakout, the bearish breakout, and leads into a bearish reversal, right? So you can see, right? So it's almost something like this, right? Uptrends, sideways, and bearish reversal. Okay, so this is how the market move. And so when you see this happens, okay, when you see this happens, so basically we would want to short the markets because the reversal happens, and the next move are most likely going to a reversal. Sorry, go to a continuations of the downtrends, okay, from bullish trends to sideways and to bearish reversal, and now going to a bearish continuations. Okay, so this is the most likely case going to happen. So usually when we see this kind of thing happens, okay, of course I would say that it's 100% going to go down. Okay, the price is 100% going to go down. But when you're able to analyze the trend, okay, when you're able to analyze the trends, basically you would able to predict or forecast that price most likely to go down, and you trade on the short side. Okay, and when the price rebound to the resistance level, okay, which is previously the support, you would want to go for a short because this is how it trends. Okay, let's see some okay, also some same example for the US dollar. Right over here, okay, as you can see, okay, the price go on the uptrend and then suddenly go into reversal, but unfortunately the price are not going continuations, and then we see a consolidation again and the price breakout. Okay, and the price breakout means that the price might go into a continuations. So this is how basically how we can analyze on the trends. So for sometimes we also can use like lower time frame to analyze it. Like for example over here, okay, you will see some small downtrends over here. Okay, and this is where we're going to cover later how we're going to analyze trends using indicators or the technical methods, right? So for example over here we will also see some small reversal. Okay, like for example over here we see some reversal, the price breakdown. Okay, then is the bearish continuations. Okay, bearish continuations, and then bearish continuations, and right now the 2-hour charts, okay, is actually all the consolidations. Okay, so the next move you want to look is whether the price gonna go break down again, right? So next thing is most likely a downtrend over here. Okay, I mean right now it's on consolidations, and the next move may be on the downtrends. Okay, so this is for dollar. So like for example, one of the example as well for gold. Okay, so you look over here, same things for the gold. Okay, you will see there's downtrends over here. Okay, higher high, sorry, lower low, lower high, lower low, lower high, lower low. Okay, lower high again and lower low, and the price starts to consolidate because there is no more lower low. Okay, or clear lower high. Okay, basically the price is actually moving to a consolidations or converging. Sorry, I'm a little bit under the weather for today, right? So basically, when the price, when the uptrend, when the downtrends start to move into a convergence or consolidation, means that the price are most likely go into directions next. Okay, so the price is either break down to form a continuations or break up to form a reversal. Okay, to form a reversal. So when the price reverse, okay, so the next thing we want to do is we want to trade on the continuations. So when we see a price pullback, we want to long. Okay, so this is how we do, because we know we know that the price are most likely to go up next because of the bullish continuations after the bullish breakout, the bullish reversal, right? So it's the things that we do. But of course, sometimes we can't uh, time a perfect entry spot. So sometimes we may want to use some help from the multi-time frame analysis to catch on the nice entry point, right? So this is some things that we're gonna cover on next week. Right? So basically, this is how we're gonna trade. So if you look at our daily markets analysis previously, we actually do cover on this potential bullish breakout, right? So this is how we can analyze the trend when you actually able to study the trends or read the trends, right? All right. So the last thing. So how are we able to analyze the trends with the help of tools or indicators? Right. So here are a few things that I would recommend guys to use. All right. So the first thing, of course, we can use the help of with the help of the trend following indicators, like the moving average or the Bollinger Bands. So basically, I would prefer to use the moving average. So as you can see over here, right? So basically, when the moving average is on the bearish crossover, okay, which means that all the moving average is actually aligned to the downside, it means that the trend is actually on the downtrends. And when you see the moving average go into a convergence or tied together, all right, so you would suggest that the market's actually on a sideways. So when you see suddenly the moving average open up gains, this would mean that the moving average is on a bullish crossover, and this would suggest a bullish continuation is going to happen next, right? So this is how we can use the trend following indicators, and we can also use the trend momentums. But for this, the MACD and RSI actually, I wouldn't say, I would not say this is a better one. Okay, I would say it's more on a supplementary help. Okay, to identify the trends, and it's more like on the entry points. I mean, this is it could be used for the entry point to help with the entry point, right? And the most ideal case would be the classic chart patterns and some of the technical drawing tools that can help us to identify the trends, such as the trend line, channel, or peaks fog, or some things. Okay, so these are the tools that are able to help us to study the trends. So if you see the uptrend channels, so basically you know that the price is on an uptrend. And for the classic chart patterns like the head and shoulder that we covered just now, okay, like the head and shoulders, okay, is the head and shoulders. So usually head and shoulders suggest that the price is on the reversal, or we can use like double top or multiple top, okay, which is something suggests a bearish reversal, or a double bottom, which is a bullish reversal patterns. So this is how we can use chart patterns for us to help us with the trend moving studying. Excuse me. Right, and also some of the flag patterns, yeah, flag pattern as well. So like this is something like the flag patterns, okay, where the price go into consolidations, and when the flag patterns happen, means that price are most likely going to a continuations in flag patterns. Okay, and then price breakout. Okay, this will be the continuations, and we want to trade in the long side. So this is how we can use chart patterns to help us with this trend studying. All right. So the last thing here is that we're going to talk about how we can apply this to our strategy. Right. So basically, trend is something that we want to study. Okay, we want to study. Okay, we want to learn about the market trends, and we want to know what the current trend is, and how the trend is going to move next. Right. So this is why we say trends, three types of trends, and three ways trend move. And it's very important for us because when you're able to identify the trends and see that what are the next move that could happen in the trends, basically you are clear with the directions that you want to trade on. Okay, and basically you are more confident and you know that what are the most likely outcome for this for the next wave of the market move, right? So like for example, when we able to identify the uptrends and when we expect the trends to go on the continuations, we want to buy the dip, correct? So at this point, we would start to use the help of maybe the indicators, or maybe we use the chart patterns to help us to trade the trends. Like for example, okay, you can use moving average or excuse me, or moving average with the MACD. Okay, take it for example, right, or the RSI or something. Okay, we can use this. Okay, so this is one of the example that I would use. Like for example over here, let me look one of the charts. Okay, let me pull up a chart. Like for example over here, we look at gold. Okay, like let's say let's say for example over here, the gold price breakout, correct? So the gold price breakout, we are seeing the moving average going to a bullish crossover. Okay, and at this point we want to wait for a pullback. Okay, unless you can trade a breakout as well. And over here, maybe you want to wait for pullbacks instead because the price keep going up. Okay, so at this point, what we can do is we would wait for the price to form a pullback because now we know that the gold is actually on the uptrend, correct? So we want to buy on the dip. But now that we know that it's on the uptrend, we want to time our entry correctly. So we want to know that where is the place that we want to buy. So at this point, usually we can use the help of the indicators, or maybe like some of the chart patterns or candlestick to help us to time the entry. Like for example over here, I will use the moving average, the MACD. Okay, like for example, when the price pullback, okay, the MACD comes to near zero. Okay, if let's say you have a two-line MACD, because the default MACD on the T5 is actually only one line, but if you have a two-line indicators, okay, basically you will see that might be a MACD crossover over here. Okay, so this is where we usually want to time our entry. Okay, like for example over here as well. Okay, maybe we see the price break down below the zero line, and when the price go up to the zero line, we will start to go for a long gain. Okay, so this is how we can trade, usually with the help of the indicators. Alright, and maybe also like for example chart patterns. Okay, so if you're using the chart patterns methods, usually like for example this is the multiple bottoms. Okay, and this is the support line, this is the resistance line, and when the price go into a pullback, okay, to the support level, which is previously the resistance, now to the supports. So when the price breakout and pullback retest, usually this is where we can time our entry. So usually it actually depends on what methods you're going to use. Okay, so once you're able to identify the trends, okay, the next thing is that you want to start to learn to time your entry, because now that you know when you're able to study the trends, you're able to trade on the trends that are more favorable to your directions. So the next thing is you want to use the help of the technical indicators or technical tools like the Fibonacci retracements or something else. Okay, it's a lot of things that you can use. Okay, but eventually the first thing you need to do is always able to identify the trend first. Okay, and once you got the trend directions on the mind, then only you use the indicators or any other technical tools that able to help you to time your entry. Right? So this is what we can do when you're able to do a good trend analysis on the markets. Right? Right. So basically, this is how what we could cover. All right. So and basically, so this is what we're gonna this is what we cover for today. And the last thing, okay, before we end the sessions for today, so let's do some conclusions over here. All right. Remember, this is what you need to know. So basically, when you build your strategies, okay, you should remember that trend analysis should incorporate into every strategy. Okay, because whether you are a short-term trader or you're a long-term trader, if you do not know the trends, basically you are trading only guessing on the guessing game. Okay, so when you trade on a guessing game, I believe most of the time you're gonna lose. Right. So remember, when you want to build a strategy, whether it's a short term, it's a long term, or it's a scalping or something, okay, or you want to use some fancy strategy as well. Okay, I don't know. Okay, eventually this thing come back to a one thing. Okay, to study the trends, you need to understand the trends. Okay, so when you're able to identify the trends, okay, basically you're already halfway through the reading. You're already halfway through the reading. Okay, and the second thing is, of course, you need to keep learning, because there's a lot of method out there. Okay, there's a lot of way out there. Okay, and then trends may change time from time. So if you want to improve your trading methods, you maybe also want to able to study the market sentiments. Okay, like for example, what push the price up? Like for example, recently, why the dollar pullback? Okay, why the dollar going to reversal? Is because of the pricing down of the Fed hike. Okay, so when you're able to study a trend, okay, and you know that the market price most likely will go down. Okay, and if you're able to study the markets, you're able to study the fundamentals, like you're able to study that the market may price down the Fed's high bet, okay, and this would be a catalyst for the dollar to go down, okay, and this would help you to improve more, right? So once you master how the trend analysis, you want to keep learning, okay? Remember, keep learning, and eventually you would start to brush up more of your strategy, okay? And last thing, okay, I want to remind most of you, okay, this is just a sharing from my point of view. Indicator is a very good thing. Okay, they are very helpful. But remember, do not rely indicators solely to just to trade the markets. Okay, indicators are just a market thermometers. Okay, it's just a supplementary tool to help you. You need to use the rules. Okay, always identify the trend first, then only use indicators to support your entry. Okay, this is something you need to remember. Indicator is just a supplementary tools. Okay, and eventually you need to able to study the trend first. Only you can use the indicators to help with your tradings. All right. So basically, this is what we would be covering for today. So I hope that this can help you guys to understand more about how to build a strategy. The first thing is to study about trends. And I hope that this does help you to understand the market, how the market moves better. Okay, so I guess this will be the end for the sessions for today. And so if you guys still have any questions, just leave me a message in the chat, and I will try to answer to it. Okay, as well as see it. So if there's nothing else, I guess this will be the end for our sessions for today. All right. So thank you everyone, and have a good day, and all the best with your trading. Goodbye.